Everyone loves the idea of owning real estate. It's a tangible asset, a place to call home, and a symbol of success. The allure of property ownership is deeply ingrained in our culture. We dream of building equity, creating lasting wealth, and securing our financial future through real estate. It's the classic American dream. The white picket fence, the sprawling lawn, the sense of belonging, and the stability that comes with owning your own piece of land. It's a vision that's been passed down through generations. A cornerstone of the good life. Maybe you picture yourself collecting rent checks, becoming a landlord, and enjoying a steady stream of passive income. The idea of financial independence through rental properties is incredibly appealing. Watching your net worth climb steadily as your property appreciates in value. Building a solid financial foundation for yourself and your family. The long-term potential of real estate investment is undeniable, and pointing to a building saying, "I own that," taking pride in your accomplishments and the empire you've built. The feeling of ownership and control is a powerful motivator. But then reality hits. The rosy picture starts to fade as you confront the practical challenges of real estate investment. Property prices are sky high, especially in desirable locations, making it difficult to even get your foot in the door. The cost of entry can be a major deterrent, and the down payment alone can be overwhelming, requiring a significant chunk of your savings. It's a substantial financial commitment that can feel daunting. Add in closing costs, those often overlooked expenses that can quickly add up to thousands of dollars. Mortgage payments, a recurring expense that can strain your budget for years to come. Taxes, another unavoidable cost that can fluctuate depending on your location and property value. Insurance, protecting your investment from unforeseen events and potential liabilities. And maintenance, unexpected expenses for repairs and upkeep expenses that can quickly eat into your profits. Suddenly, the American dream feels out of reach, a distant fantasy, rather than a tangible goal. The financial burden can seem insurmountable. For most people, the capital required is a massive barrier, preventing them from even considering real estate investment. It's a significant hurdle that keeps many aspiring investors on the sidelines. It feels like a club for the already wealthy. An exclusive domain reserved for those with deep pockets and established financial resources. You feel like you're out of your league, needing perfect credit and a spotless financial history that demonstrates your ability to manage debt responsibly. And a mountain of savings just to get started. A substantial financial cushion to cover the initial investment and ongoing expenses. So, do you give up on real estate? Do you resign yourself to renting forever? Abandon your dreams of property ownership? For years, most people had no choice. The traditional path to real estate investment was simply out of reach for the average person. But now, technology has changed everything. Again, disrupting traditional industries and creating new opportunities for everyone. There's an exciting new way to get a piece of the real estate market, a more accessible, affordable, and convenient way to invest in property without needing a fortune, and without the burden of a massive down payment or the complexities of property management. Enter the REIT, a game changer in the world of real estate investment. REIT, Real Estate Investment Trust, is a powerful tool that democratizes real estate investing. It makes real estate accessible to a much wider range of individuals. So, you may have heard the term REIT thrown around, maybe in a financial news report, or during a conversation about investment strategies. The good news is REITs open the doors to real estate investing for everyone. You no longer have to be a millionaire to invest in real estate.
Your money's working while you do less. Stay lazy, let your money do the rest. The lazy investor.
Hi, I'm Paul Cox, the Lazy Investor. Today, I'm talking about the dream of owning real estate and the power of REITs. REITs are just one of many investment tools that I'll discuss and go in depth on here on this channel. If you have an interest in learning more about investing, building wealth, becoming financially free, retiring early, If you are an entrepreneur or want to be an entrepreneur, if you're a beginner or a seasoned pro, want to know more about crypto and real estate. This channel is everything investing with a focus on doing it as soon as possible, like yesterday, and breaking money myths, like you have to be rich to make investing worthwhile, and today, the myth that you need to be rich to invest in real estate. So do the clicky clicks, subscribe to The Lazy Investor, and stay tuned. And like it. Let's break it down. What exactly is an REIT and why should you care? REIT stands for Real Estate Investment Trust. It's a specific type of company structured to own and often operate real estate. Think of it as a special vehicle designed to give investors access to the real estate market without the complexities of direct property ownership. An REIT is a company that owns, operates, or finances income-producing real estate. It's the key phrase here. These aren't just any real estate companies. They are specifically focused on generating revenue from their properties and distributing that income to their shareholders. When we talk about income-producing properties, think apartment buildings, large residential complexes that generate rental income from tenants. These can range from luxury high-rises to more affordable multifamily dwellings or shopping malls, bustling retail centers filled with stores and restaurants, all paying rent to the REIT that owns the property. Consider office towers, towering skyscrapers, housing businesses of all sizes, contributing to the REIT's income through lease agreements. And warehouses, massive distribution centers, and storage facilities that are essential for modern logistics and e-commerce, providing stable income streams for REITs. Instead of buying a property yourself, with all the associated burdens and financial commitments, you simply buy shares in the REIT, just like buying stock in any other publicly traded company. This means you can invest in a diversified portfolio of real estate assets with the ease and liquidity of the stock market. That means for a few dollars, often far less than what a down payment on a single property would cost, you own a slice of a huge portfolio of properties spread across different sectors and geographic locations. This diversification helps to mitigate risk and provides a more stable investment compared to owning a single property. The REIT handles everything: management, maintenance, collecting rent, dealing with tenants, and all the other day-to-day responsibilities of property ownership. You, as a shareholder, get to enjoy the benefits of real estate investment without the hands-on work. By law, REITs must pay out at least 90% of their taxable income. This requirement is a key feature of REITs, ensuring that a significant portion of their profits is returned to shareholders in the form of dividends to shareholders. South, you get a steady stream of income, your share of the monthly rent, without any landlord headaches. It's like crowdfunding for real estate, but on a much larger and more established scale. This makes it accessible to everyone, from seasoned investors to those just starting out. No massive down payment, no barriers, just buy a share and you're in. REITs have democratized real estate investing, opening up opportunities that were once limited to wealthy individuals and institutions. It's a way to participate in the real estate market and potentially earn a steady income stream without the complexities and capital requirements of direct ownership. Here's how it works. Real estate pros start an REIT and pool investor money. Then they buy a diverse portfolio, maybe hospitals, warehouses, or data centers. Professional managers run the day-to-day and handle everything, finding tenants, collecting rent, keeping properties running smoothly. As the tenants pay rent, the REIT covers expenses, then distributes most of the profits to shareholders as dividends. When you buy a REIT share, you're buying a claim on those future dividends. The more shares you own, the more income you receive. Plus, as property values rise, your shares can appreciate too. So, you earn in two ways: regular dividends and long-term growth. It's real estate investing without the hassle. That's the power of REITs. So how do you actually buy a REIT today? It's as easy as downloading an app. No stockbroker, no high fees. Big platforms like Fidelity, Schwab, and Vanguard offer tons of REITs with zero trading fees. Newer apps like Robinhood and M1 Finance make it even simpler. letting you buy fractional shares for just a few dollars. Most apps are user-friendly, secure, and let you start investing in minutes. Commission-free trading is now the norm, so your money goes further. Choose the platform that fits your style. Robust tools or sleek simplicity. The important thing, pick one and get started. Opening an account is easier than signing up for social media. Download your chosen app or visit their website. Hit sign up and enter your basic info, name, address, social security number. It's standard, secure, and required by law. Answer a few questions about your finances and investment goals. Just be honest. Link your bank account securely, usually through a service like Plaid. Submit your application. Approval is often instant. Once approved, you're ready to fund your account. The process is quick, safe, and straightforward. You're now set to start investing in REITs. Now, automate your investing for long-term success. Most apps let you set up automatic recurring investments. Think of it as a subscription for your future wealth. Start with a diversified REIT ETF, like Vanguard's VNQ, which gives you exposure to hundreds of properties. Search for VNQ, hit buy, and select Set Up Automatic Investments. Choose your amount. Even $10 a week is enough thanks to fractional shares. Pick your frequency, weekly, bi-weekly, or monthly. Confirm the details and you're done. Now your app will invest for you automatically, building your portfolio piece by piece. It's effortless, consistent, and powerful. You've just set your wealth building on autopilot. The real magic, the secret ingredient that separates successful investors from those who struggle, is inconsistency. It's not about chasing the hottest stock or trying to predict the next market crash. It's about showing up week after week, month after month, and year after year, making smart, disciplined investment decisions. One of the most effective ways to achieve this consistency is through automatic investing, a strategy that often uses dollar cost averaging. This approach takes the guesswork and the emotion out of the equation, allowing you to build wealth steadily over time, regardless of market conditions. By investing the same amount regularly, say $100 every month, you buy more shares when prices are low. This is because your fixed investment amount stretches further when share prices are down, allowing you to accumulate more of the asset at a discounted rate. Conversely, you automatically buy fewer shares when they're high. When the market is booming and share prices are inflated, your fixed investment amount purchases a smaller quantity of the asset. This smooths out the ups and downs, the inevitable volatility that comes with investing in the stock market. Dollar cost averaging acts as a buffer, mitigating the impact of market fluctuations on your overall investment returns. And perhaps most importantly, it removes emotion from investing. Fear and greed are powerful forces that can lead to impulsive decisions and costly mistakes. No more trying to time the market, a futile exercise that even seasoned professionals struggle with. Forget about trying to predict the perfect moment to buy or sell or panicking during dips. Market downturns can be unsettling, but they're a natural part of the investment cycle. With automatic investing, you stay the course, knowing that you're buying more shares at lower prices. Even $10 a week adds up. It might not seem like much in the short term, but the power of compounding can transform even small amounts into significant wealth over time. Over $500 a year, and that's just the beginning. As your investments grow, the returns they generate will also increase, accelerating your wealth building journey. As your dividends roll in, reinvest them to buy more shares. This is a crucial step in maximizing your long-term returns. This is compounding in action. It's the snowball effect where your initial investments generate earnings, and those earnings then generate even more earnings, creating a virtuous cycle of wealth creation. Over time, your money earns money, creating a stream of passive income that can supplement your regular earnings or even provide financial freedom. And that money earns even more, leading to exponential growth and the potential for significant wealth accumulation over the long term. Building this habit is like building a muscle. It requires consistent effort and dedication, but the rewards are well worth it. The more you do it, the easier it gets. As you automate your investments and see your portfolio grow, you'll develop a sense of confidence and control over your financial future. Soon you'll be excited to see your portfolio grow from both your contributions, the money you're regularly investing, and market gains, the appreciation in the value of your investments due to market forces. Small, steady steps lead to big results. It's not about getting rich quick. It's about building a solid foundation for long-term financial security. That's how real wealth is built. It's a marathon, not a sprint, and consistency is the key to crossing the finish line. Let's be real. REITs aren't risk-free. Their value can go up or down with the real estate market and economy. Don't put all your money in one REIT or trendy sector. Diversify with a broad REIT ETF like VNQ. Avoid checking your portfolio daily and panicking at every dip. Investing is a long-term game. Ignore the noise and stick to your plan. Watch out for fees. Most trading is free, but REIT ETFs have small expense ratios. VNQ's fee is about 0.12%, very low, but always check before you buy. Don't chase high-fee funds or get lured by hype. Stay diversified. Keep costs low and focus on the long term. Patience and discipline are your best friends. That's how you avoid rookie mistakes. Here's the bottom line. You can start investing in real estate today with any amount. The old barriers are gone. All you need is a smartphone and a few dollars. REITs let you own a piece of a massive property portfolio, earn dividends, and grow your wealth. Modern apps make it simple, fast, and commission-free. Set up automatic investments. Stay consistent, and let compounding work its magic. Don't wait for the perfect time. The perfect time was yesterday. Just start. Begin with a small, diversified REIT ETF and build the habit. Your first goal isn't to get rich overnight, it's to take action. Download an app, open your account, and set up your first recurring investment today. Your journey to real estate wealth starts now. And remember, nobody's going to build your wealth. You've got to do it yourself. Stay lazy, investors, and let your money do all the work. Watch this video next.